Good afternoon, traders. This is Matthew GS. We are episode 35 of the 51362 EMA strategy. Hope everyone's doing well, has been well. I'm going to be on camera today just because I haven't been on camera for quite some time. So, hello. If you're brand new to the stream, please do subscribe. Hit that notification bell so you're notified every time that I upload a brand new video. Now, just a quick update of where I am in life. Life has kind of got in the way. I'm in a new house. I've been painting, I'll say me and my partner have been painting pretty much every single night, doing up all the rooms, and it's been very, very time consuming. So as you can imagine, a lot of my time has been into doing that, and I haven't really spent much time with the YouTube and on my Telegram channel. So I wanna just give that update, and I will be posting more regularly once more things are done. But at the moment is 100 miles an hour and we are getting somewhere. We do see a light at the end of the tunnel, but nevertheless I still have been able to trade when I see a good quality trade setup, and I will go into that very shortly. But before I do, I just wanted to say that we do have a free Telegram channel. I will post some things in there from time to time whenever I go live, and what's happening in the weeks is what I can do at this moment in time. FP Markets is our broker. We get to use any lot size in any market. FP Markets is also on TradingView, which is great. So we get to trade through TradingView with this broker, which is awesome. Got that connected, and that's really, really beneficial. I do have the paid version of TradingView, so I do have the basic package. I get 20 free alerts with that. I am affiliated with TradingView, so if you wanted to sign up and use the alerts, please do use my affiliate link in the description. And at the end of the video, I'm going to be going over the economic calendar for the week. Okay, so before I dive into this latest video, just wanted to share something with you, or show you, should I say. So I trade on CTrader. Sometimes I do trade on TradingView, but on pretty much every single broker you can think of, you can trade with a demo account, right? It's your practice lab. You test things out on a demo environment, so there's no risk at all to yourself, to your account, because you're trading paper money, right? It's not real money, it's virtual money, just like you're playing Monopoly, something like that, right? But you should only go from demo to live when you're consistently making money in your demo account. I know that emotions are involved when you go to a live account, but it's best to go to a live when you kind of know what you're doing, right? You can't really rush this. But if I just log into my live account now, right? So you can see I've got demo here, and then I've got live. If I go to my live account, right, this is real money. And then wait for this to load. And then at the bottom, if you open this up and you go to the history, you can see that I placed the trade with gold. I'm going to go over gold, right? I placed a really good short position, and I was able to bank 10,341 pips. Now in CTrader, pips is calculated slightly different. It's a lot higher. If you're at MT4 or MT5, the pips is calculated differently. So if you're thinking, why is the pips like so massive on gold? That's the reason why CTrader calculates it slightly different. And I do think the TradingView platform does it differently as well. I know it gets a little bit confusing, but at the end of the day, this trade that I placed was a 15% gain on my account, right? It was a 1-to-3 trade. And my entry price, as you can see here, was 3344, and I closed at 3230. It's a beautiful trade, and I'm gonna go into that right now. Complete gold breakdown of why I took this trade, how I took this trade, how it played out throughout the week, some emotions involved, and all that good stuff. So the strategy works, right? It's every single week this strategy plays out over and over and over again. So if I was to let's delete all these drawings, right? So gold has been bullish for quite some time, right? Really, really bullish. So when I'm always thinking in my mind, right? When a market is bullish for a long time, it's got to switch to bearish at some time. We can't forever be bullish. The bears have got to take over at some point, right? And it happened on Tuesday, the 22nd of April. We had the 5 and the 13 crossover here, right? I did not take this trade here. If you did take this trade, the target one would be the 62 EMA, and how beautiful it was for price to just reverse straight off the 62 EMA. And this is why it's so powerful, that 61.8 Fibonacci number, right? So we could have bought here. I never bought here, and I was just observing, and then we had another bounce around the 62 EMA, right? It kind of couldn't really close below it. And I'm thinking, okay, it might go higher. But then I noticed that we had an institutional candle, right? And an institutional candle is this candle here. This is the last up candle before a down move. And if the institutional candle has captured liquidity, I keep opening Steam. Like, I just done an update for that. Let's just close that. Right. So yeah, if an institutional candle has captured liquidity, there's a very, very high chance that price is going to come back to that area, mitigate their positions, and carry on going lower or higher. Obviously, it's lower in this scenario. So I've marked up the zone. This is the potential reversal zone, right? And the reason why this candle has captured liquidity is because it's taken out this guy here and it's taken out this guy here. So these two guys, they're the highs. It's taken them out. Can you see how we've taken them out here, right? So I'm thinking, okay, there's a potential that this is going to reverse from this area. And I was observing around here on the 62 EMA, and I noticed this IC candle here. So I've gone, oh, and one other thing I have to say, and I've seen this a couple times, and I think this is a way of them enticing buyers into the market and sellers into the market and getting in at the wrong time. Can you see how this candle here wicked up, but it didn't properly mitigate out their position because it never touched the body of the institutional candle, right? It nearly got there, but it didn't. So we would have sellers would sell, 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 sell. They're selling, right? And then price is coming back up. So they all got taken out. But I did not sell here because I knew about the body needs to be mitigated most of the time. I was waiting for the body to be mitigated. So what I've done is I placed a sell limit on the body of this institutional candle. My stop loss was the wick up here, top here, right? Then I'm targeting these lows to get swept here, but I'm also targeting this institutional candle, which is this candle down here. And this is the last down candle before this massive up move. So they need to mitigate their positions at some point from this candle here, right? Down here. So I'm anticipating that that's what might happen. And this is going to be a 1 to 3 trade. So I've placed the sell limit and I placed it on Monday. On Monday, and also I want to also add that this is a complete walkthrough, right? I'm going to give you everything for this trade. when you've got a small account, anything between, you shouldn't be trading anything really under £500. I'd say it's 500 to £1,000 minimum to trade with. And I learned this from Vince Stanzione, a really well-known trader, made millions of pounds, and he says that if you're trading with risking 1 to 2% per trade on a small account balance, it's going to take absolutely forever to grow that account. And he says that you should up that to around 4, 5%, 6%. So that's what I've done. I'm not gonna lie. I haven't got a massive account. I'm not trading a prop firm or anything like that at the moment. This is a average average funds that I'm trading with. So therefore, I'm going to take his advice. He's an expert, and I've risked 5% on this trade, right? So if I lose this trade, I'm going to lose 5% of my account. So the trade is placed 5% for the stop loss. I was triggered into the trade on the Monday, and then I've woken up and I'm in a bit of profit, and I'm like, okay, happy days. So this is now on the Tuesday. Then price has started to come higher. It's come really close to my entry. I did go break even. I was like, you know what, I'm going to go break even. So I went break even, but it come very, very close. And then price decided to go lower, which was great. So we went lower on the Wednesday. And then I was saying to myself, should I use a trailing stop loss? But then I was like, no, I want to really ride this out. Gold really is hopefully going to just carry on going lower highs and lower lows. It seems like that's happening to me. This is all looking good. And then Thursday, actually before Thursday, can you see there was another institutional candle? So we could have got another entry from this candle here. Can you see how price has gone down lower, lower, lower? Then this candle here has come up, is mitigated out of their positions. I know there was a previous wick into this area anyways, but there was another one. So you could have had another entry here, and I'm thinking this might start going higher because we just had another bounce really off the 62 EMA. But then the next candle started to go bearish, and then Thursday was beautiful, got really low into this area, and it hit my take profit area here. And then I said to myself, do you know what, I'm gonna hold it. So I didn't actually set a take profit because I was aware of NFP on the Friday, so that's a non-farm payrolls. So it's a very important news event because they want to see how many jobs have been added or not, and that can really move the market. So I was like, I'm going to wait till Friday, because if for whatever reason the NFP comes out positive or negative, because this correlates with the US dollar, we could see an even further push down, and I'm going to make even more money. So I was like, right, I'm gonna hold. But we did hit the 13 EMA, and I thought, oh, this is just going to carry on going higher. But then I did hold, and luckily it did come back into my area, and then I just closed the trade. So it was a 15% gain. Very happy with that. And I'll just show you visually of why that's 15% gain. So this area here, right, if that hit my stop loss, this would have been a 5% loss. But if we clone this, if price reaches here, that's a 5% gain on the account, right? Then if I clone this again, It's a bit awkward. So, right, clone this again and move this down here. That's a 10% gain. If I clone it one more time, and then that is a 15% gain. There's a small gap up there, but it was a 15% gain on the account. It is a 1 to 3 trade. You can see that says 3 there, so 1 to 3 trade, and it was a beautiful trade. It was a beautiful trade. I do want to say as well that there was imbalance. There was imbalance as well that needed to be filled. So if I just delete all these drawings, right? I did have a little look on the daily time frame as well, just to see if there was any imbalance it was heading towards to fill in, and there was imbalance here that was filled. And one thing I do want to say as well is there is this institutional candle down here, this daily institutional candle. So I do think that gold is potentially heading to this institutional candle here to mitigate out of their position, because it's the last down candle before this up move. Like whatever happens on the higher time frames happens on the lower time frames. It's like all the same. Every single time frame is exactly the same. So I'm anticipating that gold is going to carry on going lower for next week, days and weeks to come. And there is further imbalance on the daily time frame. There's imbalance here that needs to be filled. And then we just have a quick look on the weekly and then the monthly. Like we've just been bullish for such a long time. Like it just makes sense that gold needs to have some bearish momentum at some point. So looking for short still for next week, and that is my target. So for next week, I've closed the position for this week, but next week I'll be looking for another entry to ride this further down. And you can see down here, this is the potential reversal zone, the potential TP. So yeah, more shorts to the downside for gold. And yeah, it's been a really good week. This is the thing also on the 4 hour time frame. You really have to have a lot of patience, right? You have to monitor your trades. It's kind of it's swing trading in a way. You have to monitor your trades. You have to be looking at your trades every single day to see, right, where's the market now? What's the market doing? Are we having lower lows and lower highs, or higher highs and higher lows? Has this imbalance been filled? Have we reached an institutional candle? Like you have to monitor it, and it's taken a long time to get to this stage. But I have mastered being very patient. Discipline is really there now for me. Like I'm always growing, always working myself, and you've got to do this to become a beast trader, a trade master, right? And journal your trades. Like I use Excel. I have my own journaling trading system, and everything is in there. The percent gain, how much pips I've made, how much money I've made, my entry price, my exit price, my notes, why I took the trade. There's you need to journal, and I would journal as well on your demo trade. But I haven't really looked at anything else. If I'm going to be honest with you, I'm not going to go over anything else this week. Like you only need one trade a week, one good trade a week. That's it. And then once you've banked that trade, it's on to the next week. And yeah, one one final thing before I do look at the news for the following week is you need to know when not to trade, right? And I'm always learning from other traders. You've got to follow other traders. You've got to learn as much as you can, read books. You have to know when not to trade as well. But yeah, it's been a really good week. Really happy with gold. Let's have a little look for what's going on next week in the markets. Monday, so only really concerned about red folder red folder news. I am anyway. I mean, you can put your attention on the low ones, but they're not really going to do much. Even the medium ones not going to do much. So yeah, only focus on the higher ones. So there's US dollar, S&P. That's on Monday. That's on 2:45 p.m. Maybe something on the Monday. I don't really like to trade the Mondays. Like gold just happened to be there, and I was like, I'm just gonna place the sell limit. Like it's done. But normally you get the best setups between Tuesday, Wednesday, Thursday. But yeah, the Monday was yeah, just needed to be placed. Luckily, I was looking at the trades. To be honest with you, I don't really look at the markets on the Monday, but that looked juicy, and I didn't want to miss out. So yeah, I'm glad I did. But Tuesday, there's red folder news. I mean, there's red folder news every day, but it's good to see what's actually going on, right? And then, yeah, not much on Tuesday, Wednesday. Wednesday, there's a few US dollar that could really move the markets quite late into the evens. And then Thursday, there is red folder news around 1:30 p.m. And then Friday, not much. So there's a few things happening, but yeah, my eyes on gonna be on gold. Like I really think gold's gonna carry on going lower, and yeah, I will have a look at the other trades to see what's going on next week. Bitcoin's just been flying. One thing I will actually say with Bitcoin, we could reverse from this area here. It's the last down candle before this up move. So this is looking juicy for a buy. I might set a buy limit actually on this. This is looking quite juicy. Or observe what happens when it reaches the zone and then get in on the move higher. But this is looking quite good for Bitcoin. US 30 has been very bullish, and this was beautiful. You see how we've just gone straight into 62 EMA. We've just rejected straight off it, and then we've just gone higher. So this was a potential entry, but I was very happy with the gold. I was like, I'm just gonna keep riding with gold. And then Forex, haven't really been looking that much on the Forex, and I have been keeping my eye on the Dixie as well. So yeah, it looks like the dollar is starting to strengthen, which is good. All right, appreciate everyone jumping on. Please don't forget to subscribe, and I will see you in the next one. See ya.